One of our clients, they are on the wholesale industry. They sell diamonds. Father and the two children. Father is 61, the children 28 and 33. So they came in, they're making like $12 million a year selling these diamonds and gold. So what they've been doing is for the last 20 years, they've been paying taxes. Their taxes are from $750 all the way to $1.2 million. Taxes, tax liability, not taxable income, tax liability. After expenses, after everything, they have to pay that. So they came in for us to help them to reduce their taxes for year 2024. We showed them, they own 20 properties on top of that. So we showed them that how can they reduce this? The thing is, they've been paying this money on a monthly basis. So they've been sending to the IRS $100,000. That's what they've been doing for the last 20 years. Money in advance, because they're making 12 million, they say, well, I guess that's what I have to pay. So they have 15 employees. When they showed up, we told them, did you know that you don't have to send the $100,000 to the IRS from your business checking account and go into the Treasury Department? And they say, why? Because we've been doing that for the last 10 to 15 or 20 years. So we put together a strategy. We went over their P&L and balance sheet. So what happened is they never did an accelerated depreciation of those properties. They've been doing just regular depreciation here and there, which didn't really help much to reduce the taxes. The other thing is they did not have any type of retirement plan. Remember, they have 15 employees. They're in California, and the California law says that they have to have the CalSavers law. I don't know if you're familiar with that. The CalSavers law showed up right during the pandemic, where Gavin Newsom said, if you have a company and you have more than 10, 20 employees on W-2, you have to offer them some kind of retirement. But that's changed. So that was before, during the pandemic, 10, 20 employees. Now is one employee. So if you're a business owner and you have one employee on the payroll, you have to offer some kind of retirement plan or offer the platform of CalSavers. Yeah, it's a law in California. So if you don't do that, you get penalized. So a lot of business owners, we have all these big companies making $10 million, $5 million. They get this $20,000 bill from California. What is this about? Oh, because we believe you have not offered anything to your employees. Nasty. Going back to that, how we save this client these $1 million taxes. So we show them, did you know that we can open a platform to do a retirement plan for you, for your 2 kids, and then 15 employees? So we put together a plan called Cash Balance. It's a hybrid. It's a hybrid plan for retirement. So they put $500,000 there. So right there, $500,000 is going against the gross receipt. Dollar to dollar to reduce the taxes. We utilized the 20 properties. We told them we don't want to do the 20 properties because we want to leave some of the properties for next year, which is for this year, the 2025. So we use half of that, 10 properties. They were in Florida, Nevada, and California. So we used those 10 properties. It came down to, I think they gave us almost like $2 million of tax deductions, plus the $500,000. Just think about 2.5, and then we did other planning like R&D tax credit. It's not a lot, but it was 100, 200 here and there. So we plug in the numbers, they ended up paying $60,000. So this is legally through the IRS, because these are the IRS codes that are giving us, so we just utilize. So they didn't believe. They said, oh my gosh, we're going to consult a tax attorney. So they went and talk to a tax attorney because they're making $12 million. They just want to make sure they don't do anything illegal or anything that's going to jeopardize or create an audit from the IRS. So they went and talked to the tax attorney, and they say, yes, these plans that you guys put together, they are all legal. They're good. 1 million, so pretty much going back to them, like the R&D tax credit, the cost segregation, the cash balance. This is just few of the IRS codes that we use. So now we gain their trust. Now we're doing accounting, we're doing taxes, we're doing CFO advisory, so a lot of things because they trust us. They saw that, so they got the money back.